Welcome back. Now, a sharp decline in jewelry consumption has led to second quarter gold demand falling 6% year on year, excluding OTC investments. And on the upside, if the element is included, total gold demand is up 4% during the period. That's the highest it's been for the term in question since the World Gold Council started taking stock of the data 24 years ago. Krish Gopaul, who's Senior Analyst for Europe, the Middle East and Africa at the World Gold Council, join us now to unpack the second quarter gold demand trends in greater detail. Krish, thank you for your time. Good afternoon.
Good to be here. Good afternoon.
All right, maybe we can talk about that demand we're seeing there. 4% up, I think, there year on year. Help us put that into context and really what it means for us to have seen this amount peak at this time.
You're absolutely right. I mean, as you noted, Q2 was a record for total demand in our series back to 2000. And if you're looking at the real primary drivers of that, we have the over-the-counter or OTC element of investment. And we also have the continued strength in central bank demand. So I think it's incredibly interesting to see what's happening. You also note that at the same time, we're seeing very, very high gold prices and how that's impacting the more consumer-led elements of the gold market, such as jewelry and technology. So overall, it's painting a very interesting picture. But I think that the fact that we've hit a second quarter record in our series shows that the gold market remains in very, very good health.
It's interesting there because, of course, I'm keen to get thoughts on how risk may have played a role in the demand that we're seeing now. Overall risk from a consumer perspective, Krish, but also, I guess, from an institutional perspective.
Well, I mean, it's certainly a big factor when it comes to gold. I think if you look at the moment, both geopolitically and economically, there's a huge amount of risk and uncertainty out there. And that's having an impact on all the sectors of the market that we look at. Certainly, if you look at it from a consumer standpoint, the concerns over inflation, the cost of living crisis that we're seeing across the globe is really having an impact on people's ability to potentially transact in gold, especially as I mentioned, the consumer elements such as jewelry. But then on the institutional side, the more investment-led elements of the market, risk again is having a big impact, but potentially more positively, where we're seeing more interest in gold on the bar and coin side, particularly in the Asian market. And we've seen we saw slower outflows in gold ETFs during Q2, and the latest data that we've got for July is we're seeing a continuation of those inflows that we started to see towards the end of Q2 continue into Q3, especially from the Western markets where it had previously been more absent.
Also interesting, I guess, is what we're seeing here with central banks still demanding quite a bit of gold. Let's talk about that and what also continues to drive this trend.
Yeah, so it's been a long-standing trend that we've seen since about 2010, right around the kind of the financial crisis, where central banks who had previously been selling gold for 20 years had a very, very big shift in mindset towards gold and have been buying ever since. And in fact, that trend accelerated both in 2022 and 2023, where we saw over 1,000 tons of demand in each of those years. Now, as we move into 2024, we've seen both in Q1 and in Q2 that continuation of that strength in buying. In fact, H1, the first 6 months of this year, has been the strongest first half we've seen in our data series back to 2000. So it really kind of echoes the point that central banks continue to be strong buyers of gold demand and continue to be a strong element of support for gold.
We also saw that supply is up 4% year on year. Help us understand how that works in terms of demand and supply, please, Krish, if we are at least producing enough to meet our demand.
Yeah, so when it comes to supply, there are generally two major components. The first is mine production, so that's the fresh gold that's dug out of the ground in major jurisdictions around the world, South Africa being one. But you also have the recycling element, so that's the amount of gold that gets sold back that's already being held by consumers in various markets. And what we've seen really is we've seen in the first half of this year, we've seen very, very good levels of mine production. In fact, our expectations is we might be hitting a new record high for annual production this year. So the market remains in rude health despite having potentially higher costs that we've seen through inflation. They're exposed to the higher cost as much as anybody. And in the recycling side, interestingly, despite the higher gold prices, the recycling levels that we saw, particularly in Q2, were below our expectations. And a large part of that was due to India, where we saw a lot more gold for gold exchange rather than selling back of gold for cash. So it's an interesting dynamic that we're seeing, that people are using their gold rather than offloading the gold that they hold. So it makes for really interesting dynamics, both on the demand and the supply side, as we move from this first half of the year into the second half of the year.
What we're also seeing here, I guess, is the fact that Western investors are showing a renewed interest in gold ETFs. What do we make of that?
Yeah, that's been a really interesting turnaround that we've seen in the last month or so. Certainly, as we've written in the report, certainly for a while now, Western investors seem to have been less interested, particularly looking at the gold ETF data. A lot of the demand that we've been seeing, or the flows into those funds, coming from Asian investors, China in particular, and India too. However, as we've moved to the end of Q2 and now into Q3, we've really seen demand from Western investors come back strongly, both in North America and in Europe. And I think some of that, again, comes down to the point you mentioned about volatility and uncertainty, and how that's continuing to be at a very high level. But you also look at where we are and the kind of the macro economy, so much more closely watched monetary policy moves from the Fed, from the Bank of England, and others around the world. So there continues to be that focus on how the global economy is going to manage not just the economic risks, such as the US federal debt, but also the geopolitical risks, whether that be the US election, for example, or other kind of localized factors in key gold markets. So it certainly does all play a very interesting part in a very interesting picture.
Well, Krish, we'll look forward to unpacking this data in future with you. Thank you so much for taking us through this one this afternoon. That was Krish Gopaul. He's Senior Analyst for Europe, the Middle East and Africa at the World Gold Council.